Hello everyone. Good morning, good afternoon, and good evening. So as I was discussing in my last video about natural gas, the natural gas is likely to plunge, and it has plunged. Really, the movement has been really great. It closed at around 295.9, and today it opened at around um, 282.4. So right now it is trading at 270 levels. So I think around in terms of dollars, like yeah, 290 295 should be the bottom over here. I don't expect natural gas to plunge below 295 to 2.95 over here. I can see that, yeah. And crude oil also has been trading negatively since the starting of the day. Um, Coming to a few other things that I want to discuss today, I want to discuss about ICICI Bank and the impact of AI on banking shares. Um, we can see like HDFC Bank has recovered fairly well, like more than 2% gain, and ICICI is also trading kind of at the same level that it from the previous day. It has not moved much, considering there has not been just 0.14 negative right now. But I'm expecting ICICI Bank and HDFC Bank to have really fall by a very big margin. Approximately about for ICICI, I can give the target maybe. I'm expecting ICICI to trade around 1320 levels, honestly. Around 1320 levels, that is what I could say ICICI can plunge. 1320. The reason is most of the IT stocks have recently, because of the Claude AI thing, most of the IT stocks have retraced back to their 2000. I think the retracement has been severe, and the retracement has been severe, and it has dropped by approximately 200 points. Yeah, by approximately 200 points, and yeah, the drop has been approximately 200 points. So that is approximately again more than 10%. Definitely more than 10%, around 15%, I would say. 15%, 15 to 20% for the IT stocks. The movement has been, if you're checking the Nifty IT, that will give you a clear picture. Nifty IT was at around 39 100 at one time. Now it is 30. The plunge has been more than 20%, looks like. Yeah, approximately 20%, you could say. So the banking system in India, that gathers around 15 to 20% of the revenue from IT. Okay. So since there has been a decline in IT shares right now, I'm expecting banking shares are also likely to face the decline, because of the this is kind of a this kind of an effect like you mostly see for the businesses which are kind of aligned to each other. So IT is very much aligned, like depends a lot on banking. Similarly, banking depends a lot on IT. So since there has been a decline in IT stocks, I think banking Nifty Bank is also going to face a decline. The decline is going to come this month or the next month, so that is unsure. But expecting a decline to come very soon. Like I was expecting a decline to come by 15th of from today, but till the next till 1 month, like around. Around I'll say by 14th of March. Yeah, by from today till 14th of March, I'm expecting Nifty IT to plunge by a massive margin. So the participants will be SDFC, ICICI, all the private banks. I'm not expecting the government banks, like the where government has a bit of holding, like Canara Bank or Union Bank or State Bank of India, to plunge that by a huge margin. But the private banks are definitely going to face a challenge considering their businesses from IT is approximately like that constitutes around 20% of the revenue that they generate. Since IT is getting impacted because of the Claude AI, so banking system, all the banking shares are also going to be impacted, and the plunge is going to be massive. I am expecting the minimum of 10% at the beginning. So for ICICI, it is currently trading at 1414. So 10% is how much? 1414 into zero point 0.9. So it is approximately 1272. I don't expect it to go to 1270, but for the time being, I expect it to come around 1320. That is my understanding. ICICI should come and hover around 1320 levels to 1320 at the bottom and maybe 1340 at the top. Yeah, 1340. I'm expecting a huge plunge. So the plunge is going to come this month or next month. So that is not certain, but the plunge is going to come very soon. Similarly for HDFC Bank, I'm expecting it to trade at around yeah, around this levels, around 884, or at the bottom it's 884, on the top it is around no, sorry, it's not 884. Although if you look into the results for both these banks, right, ICC and HDFC, which are a very big part of Nifty and Nifty Bank, the results have been extremely good for both these banks, the last quarterly results. But still, since the confidence in IT has declined, so I don't think banking systems like the banking shares can also uh, can stay positive right now. The sentiment is extremely negative. So I'm expecting HDFC Bank to come around 1890 to 1870. For ICICI, as I mentioned, for ICICI the targets are around 1340 on the top and 1320 at the bottom, in between this range. This should be the first target, and then maybe we can see it further plunge, but definitely we're expecting, like I'm expecting a massive plunge in Nifty Bank and as well as all the banking shares. I think all the banking, Axis Bank maybe, it will also definitely be impacted since a private bank. Government banks will still have a bit of hopes alive, because there is not much of dependency on the government banks from IT perspective. The revenue that they, because most of the salary account of most of the employees from working in the IT, Indian IT sector, that's in the private banks. They don't have the salary account in SBI or Indian Bank or Canara Bank. They don't have the salary account. So they have the salary account in SDFC and ICICI mostly, and Axis Bank as well. So that's the reason, since the layoff season had just started right now, and the recently the one thing was the news, like Google is going to has already offered exit plan for its employees. Like you can exit right now, you can get a severance package of a few weeks pay. That is a good, like that is they have offered their employees right now. And this is something I believe most of the companies, most of the IT companies, whether that be a service based or product based, they are going to get into such a scenario where they will be offering severance packages to their employees for early exit. Okay, and that's definitely going to have impact on the banking shares for sure. And this is something which I think the FIs can have a better visualization, because since the IT, whatever the IT companies that we're looking into, say most of them have businesses in US, and they have a better understanding of what's happening in their market. So whatever happens in their market, so that has got a repulsive effect in the Indian market, but that slows up slowly. That doesn't shows up immediately. So that will definitely show, because what I could see, like Salesforce has recently also asked employees for the same thing which Google has asked for, like to for an early exit, taking a severance package. So their banking system is slowly collapsing because they are saying like what the dependency of for I think for the US IT on the US banking banking shares is like is even more. It's not like Indian IT. Indian IT constitutes for approximately 15-20%, but the US IT that massively contributes to the bank massively. That will be approximately I believe around 25%. Okay, so that will have more impact, while on Indian IT the impact is kind of less because uh, it considers only 15 to 20%. Yeah. So yeah, so that's the analysis. And coming to the other shares, I think Swiggy and Eternal, they are looking very interesting right now. Swiggy, I could see like there is a massive buying that's happening right now in Swiggy, and Swiggy can further extend gains till around 430, 430, 440 for sure. But again, Swiggy and Eternal are also going to be impacted because of the plunge in IT shares. That impact is like it can be avoided. It is very much imminent that Swiggy and Eternal shares also likely to drop because of the plunge in IT. Because the majority of the customers of Swiggy and Eternal are from the IT background. So if they don't have the money to order stuff on their platform, then definitely the revenue is going to decline, and that will be evident on the share prices. So expecting Swiggy is definitely performing really well. I'm sure in terms of the current pricing and the momentum. But yeah, it's 345 is something it can easily go. Okay, 345, but I don't expect it to more than 345. Yeah, but I don't expect it to yeah, Swiggy and Eternal, I'm a bit suspicious, and I think like they're gonna have a plunge as well, but they're looking really good. Because if you continue if you continue to see the buy over here, the buying, the momentum over here in Swiggy and Eternal, it has been extremely good. And if you compare that to their counterparts in the United States, that is Dash, and there are a few more. Dash is the most popular one. So the market cap for Dash is approximately 68 billion, approximately 68 billion. And currently Swiggy is around, I think, uh, 20 around 30 billion, Swiggy. So they are kind of having a comparison over here. Like Dash is performing really well. The EPS for Dash is approximately around $0.7, 0.6 to $0.7. But we don't see that in case of Eternal and Swiggy. So there is a comparison that if like everyone is doing, like if Dash is performing that good in a market of maybe around 200 million target customers. In India, the target customer is even higher. It is approximately, I would say, around 300 to 400 million. Okay, so they have only 100 million, the target customers. So that is the reason the market cap for Swiggy and Eternal, the expectation are like they'll be traded at higher levels. But at the same time, if IT plunges, then that will create question like who will be the ratio of the target customers that they initially had will slowly decline. So that's the reason I believe Swiggy and Eternal are also going to face challenge. But right now they are looking positive. But the impact will be, there will be impact, but it will be very slow impact. So we may not see a plunge very quickly, but the plunge is definitely coming, uh, like very soon. Uh, the power stocks are going to perform really well. The power stocks, because of new data centers being like there are plans to operate new data centers in India from various cities. So there is a lot of demand that is going to come and hit the power sector, and about the shares in the of Tata Power and then other peers are definitely going to have a positive impact. So that's all for the talk today. I hope you are having a great day. So the disclaimer at the end. So now the analysis, now the discussion that I do on this channel are meant to take an actual trade. They're meant for educational purpose only. Thank you.